Welcome back again, my people. My name is Mutombo. Welcome to Property Wealth. And today I'm going to be covering about the recent buzz that's been happening around coronavirus, how it affects the property market. Not just property market, a lot of investments out there, businesses. I'm going to be going into a few details on how coronavirus affects any businesses out there. I'm going to mainly focus on property because I'm a property investor, as you probably know by now. Obviously, I'm going to also talk about the recent drop in interest rate to 0.25%. I'm going to be talking about the pros and cons. So stay tuned and I shall see you guys soon. Peace out. Welcome back again, everybody. I hope you guys are having a lovely day. It seems like it's a very lovely sunny day out there today, so hope you guys are keeping safe. There's a recent outbreak of coronavirus. It's affecting everywhere, all over the globe, from Italy, China, UK. There's a lot of buzz happening around this. Everybody's in panic mode. Everybody's fearing what's happening. People are not going out. So I'm gonna just discuss, go into a little bit of details as to what's happening. And but before starting, I'm gonna start with a quote from Warren Buffett. He mentioned, "When others are fearful, be greedy, and when others are greedy, be fearful." That's a very, very, very powerful quote, which I've always applied in my sort of business structure, in my sort of business journey. I always watch the market, I watch the population, how the population is reacting to situations, and whenever there's a crisis and everybody's panicking, everybody's fearing, just like Warren Buffett say, that's the time for investors to be greedy, because the amount of opportunities that's lying, when there's panic in the market, it's huge. So I'm gonna go into obviously the details about that. So there's two sort of outcome out of this. There's a positive outcome and there's also the negative outcome, which I'm gonna cover in a minute. But one of the reasons why the Bank of England, have dropped the interest. Number one, the fear. There's fear among people regarding coronavirus. So obviously when we're talking about the consumers' confidence, that's gone low, because obviously at the end of the day, nobody's going out, there's no movements, there's a lot of fear on the market. So the Bank of England have made this decision so that to sort of stimulate people in becoming active. So they've reduced the rate. They don't want people to be, they don't want people to lose interest and not be active. In that way, it will slow down the economy, and that will lead to, that could lead to a recession. So the Bank of England have they're trying to be creative by reducing the interest rate so that people can be motivated in continuing being active in the market. So that's one of the main reasons, and also to help people, in terms of these difficult times. Wherever there is panic or fear in the market, that's the time for each and individual motivated business people to be in acquisition mode, to be in a sort of mode where you're ready to jump in and buy, because that is where I always say the rich becomes rich whenever there's fear in the market, when there's recession. When you listen to a lot of business people out there, they will tell you the biggest opportunity to become rich and financially free is whenever there is panic in the market, when there's recession, or anything happening in the market. Then that's the biggest opportunity one could take. Whenever you take calculated moves, then you can make it in the market. When it comes to financial freedom, there are two outcomes out of there. The first outcome, I'm gonna focus more on. I'm gonna try to start with the negative and end it on the positive, because, as I say, we like to end it on a positive note out here. We don't want to end on a negative note. So I'll start with the negatives. Number one, the property business. How would this affect the property business? It affects many businesses, but I'm gonna mainly focus on the property business because that's the field that I'm more aware of, and that's the field that I invested. Others can apply it to other field, other businesses, but mainly this is gonna be more in terms of the impact this has on property investing. So as we know, property business is a people's business. Whenever people are impacted or people are affected by something, automatically, that affects the property market and the property business. Because whenever you're thinking of property business, just always remember that it's a people's business. And if there is no movement in the market, there's people fearing, people are not, there's no movement, automatically there is an impact on those who are doing property investing. And the ones who I think, in my opinion, would be affected most is especially those who are doing service accommodation. Service accommodation, as we know, is those who have a house, they are putting it in as a service accommodation. So it's sort of running in like a hotel, but with that staffing, it's like a self-management property investing. So they have a property, they pull in places like Airbnb, and then it's renting on a daily basis, just like a hotel. It operates exactly the same as a hotel, but with that stuff. There's a lot of profits when it comes to this particular type of investing. However, this investing is good when the economy is well. When there's movement, people coming, people traveling, perfect. However, I think there might be a decline when it comes to service accommodation, especially in the periods that we're going through, where we've seen on the news already, China, there's been an outbreak in China. Italy have completely stopped everything. There's no movement. Everything has stopped working in Italy. America now, I was reading the news now, they don't want no flights coming to the UK or Ireland. So there's a lot of panic, a lot of fear, around the globe, globally, around this coronavirus. Everybody's scared. Everybody wants to self-isolate in their own environment to make sure that they're safe. Which automatically, as I mentioned, when people are affected, then the property investment also gets affected. The property market also gets affected. So that's one way which I see how the property market might be affected. Those who are renting, probably it's sort of like single rent, single let, or HMOs, houses in multiple occupations. They might not be affected as such, but this is the time where I always tell people, investors, to be creative, especially landlords. I'm a landlord and I try to be creative. In times like this, they make sure the sanitizers in the house, make sure the house is clean, because at the end of the day, you want your tenants in the house to feel safe. And obviously there's also a lot of issues arising. What if one of your tenants has got coronavirus? How would you self-isolate them? There's a lot of questions, gray areas around this. The government has published something on government website regarding how to manage somebody on self-isolation, but it's not too clear yet. So obviously when I get the answer, I'm still searching around the area. Once I get something, I'll post again and inform people. But that might be the challenges when you're doing HMOs. If one of your tenants, you probably got 5 people in the house living, and one of them managed to sort of catch coronavirus. How would you isolate that person if they're sharing the kitchen, if they're sharing the bathrooms? So those are some of the difficulties, but I think for now, I'll always advise all the landlords out there, make sure the house is always clean, make sure you have good hand sanitizers, hand gels, anti-bac wipes, put whatever it's like, flyers, labels regarding hygiene, all over the house, so that people can try their best to keep the area in the environment safe, as safe as possible. Because at the end of the day, we probably can't get rid of the bacteria or the virus, but we can minimize it. So that's one phase which I think properties could get affected. The second negative thing which I would like to focus about is how this could lead to recession. This is like how can I say, an introduction to recession. As we know, there are 3 ways which causes recession. The first way, I think, is fear. Whenever there's fear, there's panic everywhere, boom, it could lead to recession. Number two, people run out of money. If the people run out of money, everybody's looking for money, there's no money, that could lead to recession. And finally, if the bank runs out of money, right now the bank is pretty much giving free money. The interest rate is very low, to help businesses out there in order to ease the impact of coronavirus. So the bank wants the economy to still run, and they've made the decision to decrease the interest rate to its all-time lowest. And if the bank runs out of money, then we will go into a recession. And obviously there's been a lot of predictions that 2020 will be the biggest recession ever, since the history. There's a book by Robert Kiyosaki. I think the title of the book is Prophecy, if I'm not wrong. He's been speaking about this since 2004, 2003, that there will be a recession coming, and his prediction was that 2020 will be the biggest recession ever made. And obviously there's a pattern to these recessions. When you go down history, you'll see that there's always a pattern, and a lot of prophecies, a lot of people have been predicting that 2020 will be the year that we will face the recession. It will be one of the biggest recessions. So if we do go through a recession, a lot of people will lose money. However, the well invested, the people who know business, they will be rich. This is where the rich become really rich. They make a lot of money, and the poor get really, really, really poor. It's all about knowledge. It's all about knowing what to do in terms of recessions. So this could be the impacts. People are saying coronavirus is like an introduction to recession. It's going to create recession because it's fear. People won't have money sooner or later. The bank will run out of money, and then that will trigger recession. There is good side to it. If you go into recession, then that's when I always tell people the savers are losers. And Robert Kiyosaki always talk about savers are losers, because right now the interest rate has gone down to 0.25, all-time lowest. If people are out there saving money in bank, you're pretty much not getting anything. Your interest will be nothing. Your money is just there, it's not doing anything. So this is why I always advise people, put money in value. Don't put money in banks, because at the end of the day, the banks are taking your money and investing. Whilst you're giving them your money, they're taking it, they invest in it, and they're giving you just a tiny portion of interest. And now 0.25 is very, very, very low. So those who are still thinking of saving, they will the one who will be losing at this point. But those who will take now their money and put it in real assets, real investments, those are the ones who generally tend to gain when it comes to recession, because whenever there's panic, everything goes downhill. Prices, it's like Black Friday, it's a bargain for everything. So when you think about it, what do people do on Black Fridays? Whenever there's deals, they go and they buy. Those who actually lose are those who are selling during those times, because I just recently saw the market, when you look at the trading markets, the stocks and bonds, everything is literally going down. And the ones who are losing are the ones who are not wise when it comes to investment, the ones who are not educated enough when it comes to investment. They will take the money, they will panic, they will take all the stocks and start selling. But what do the rich do? They take it, they start buying. They buy whenever there's deals. For me, this is like Black Friday. You buy, if you've got those who have money, those who have assets, this is the best period to be buying, because at the end of the day, whenever the recession ends or whenever panic, the period of panic goes away, everything starts going back up again. We've seen this generation and generation. It's a pattern. It doesn't change. History always repeats itself. Whenever there's fear, things go down. The losers, they're scared. Out of fear, they sell everything. Never sell low and buy high. Always buy low and sell high. This is what people don't understand. I'm looking at the stock markets. People are selling, they're putting their money into, they want to quickly come out because they feel like they're going to lose their investments. They're taking their money, and when the market is crashing, that's when they're selling their precious. So whether stocks or bonds, they're selling it during these times. And what the rich are doing is they're buying them because they know they're getting it out of bargain, and they know they're just gonna buy it, go through the trials. They're going through the trials out of whether it's recession or this coronavirus period. Just endure it. With the business, they're holding it, they're buying and holding and enduring through the struggles, because they know sooner or later it will end. Eventually, it's not going to last forever. It might take long, but it's not going to last for eternity. There's always been a cycle. When you look, there's been swine flu, there's always been a period of fear and a period of resolution. So there will be a resolution to this. I'm not sure when, I'm not sure how, but there will be a resolution to this. Whether we do go into recession, it's fine, because at the end of the day, during recession, those who are wise will make money out of it. Because during the recession, those who have money in the banks, I'll advise them to start looking into becoming active. Don't just stay on the sideline and observe. It's like a story. I always tell people the story of a person called Malcolm. I don't know who Malcolm is. I just made up the name in my head. So don't ask me, Joe, who's Malcolm? This person sits there. He's an observer. He will, from time he's been growing up, he's been working. He watches the markets going up, markets going down, whether it's properties, whether it's stocks, bonds. He's always an observer. He wants to get into and become active, but he doesn't know when to jump in. He's watching the market goes up. I want to buy, but he doesn't buy. He's like, okay, let me wait for it to go down. So he waits for the market to go down. Let me put my money in it and buy when the market is down. But wait, let me observe, always on the sideline. I'm going to observe and wait for it to go down again. But then as soon as he wants to buy, he realizes the market starts going up. So he's following the market, and at the end of the day, years are going by, 1 year, 2 years, 3 years. This person is still on the sideline, watching, observing the markets going back and forth, waiting for the perfect time to jump in and invest. Because if he's waiting for that perfect time, there is not a perfect time. Yes, when the market is low, it's good, it's an ideal, but don't wait for when would it be the perfect time. Even when the market is low, when would it reach its all-time lowest? Nobody knows. For me, when I see the movements, markets starting to go down, I'm already starting to buy, whether it's stocks, whether it's bonds, whether it's properties, because at the end of the day, when the market's going down, it's always a way up. Don't stay on the side, even if it's high. You want to buy, it's good to buy, but don't panic when the market goes down for you to start selling, because at the end of the day, you will be the loser. And this person, Malcolm, has been years, 10 years, watching the market going up and down, and he wants to buy, but he's waiting for that perfect time. Until 25 years, 50 years, 60 years, 70, 100 years old, Malcolm is still there with his Zimmer frame, watching the market going up and down, waiting for the perfect time. And eventually Malcolm died, and still in his grave, waiting for the market to go up and down. Guys, don't be like this Malcolm guy. It's just a name I've made up, so it's not a real story based on Malcolm. I'm just giving an example. The lesson to this is, don't stay on the sideline. When there's a lot of opportunities, market crashing, you're just staying there watching. When would it be the perfect time? The market rising. When would it be the perfect time? And then market crashing, going through recession. There was a 2008 recession. People were just watching. What do we do? People are confused. The recession resolved. Things went back up. People are still standing the same, undecisive. And now 2020, we're going through, which seems like a recession. We don't know yet. People are still sitting on the sidelines, still watching. Don't be like this person, guys. The lesson of and the moral of the story is, always be active. Stay active. Let the money work for you. Don't work for the money. Let the money work for you. Once you have a bit of money, put it in an investment. Don't leave it in the bank, because at the end of the day, the money that you're giving to the bank is the money that the banks are using to invest. I'm gonna go into that soon in a minute to explain how the banks are investing. with your money. So I've spoke a lot on I've mentioned few points on the negative. Now I'm gonna focus on the positives. The first thing of the positive is, number one, guys, never forget savers or losers. Robert Kiyosaki always preach about this. Savers or losers, savers or losers. And at the end of the day, if you're investing, then you're the winner. And if, this period where we see the interest rate dropping down, if you're a saver, you're going to end up losing at the end of the day, because the interest, you'll be giving the back money and you'll be getting pretty much a portion interest or profit out of it. Whereas if you manage to take that money and put it into an investment, then when you're looking at years down the line, after the this panic and the phase over, the value of whatever you're buying now will completely go back to its peak range or its normal range. So that's one of the positive things which I always started about that. If you're saving, these are the times that you probably will lose. With the interest rates going down again, those who have mortgages, those who have houses, this is probably the best time to think about refinancing, because the interest rates, number one, is low, and we know, especially those who have properties, when the interest, we go for interest, we look for the best deals out there, because that's what makes you financially free. That's what gives you a good passive income. When you're paying low interest, then the more you're having on your return. The higher the interest, the more money you're giving out to the bank. And obviously we've seen the bank have given one of its lowest of all time interest, which is 0.25. So for those who have properties, this is probably the best time if you can go to the banks, manage to refinance and get it in this deal, this interest rate. If you can get a fixed rate of even 3 years to 5 years, then you're good. Even if in 1 year time the bank decides to bring up its rates after the recovering of this period that we're going through, then you probably wouldn't be affected because you've got a fixed rate of 0.25 currently. So this will be something positive for those who want to refinance, because we know your cash flow will be better. If you've got an interest only mortgage and your interest was high and you manage to refinance it right now, you get it in a better deal than the current deal. You will have a better cash flow because your interest rate will be less, but your profit will still be more, because at the end of the day, even though the economy is in panic, even though people are fearing, we know throughout history that the renting never changed. Most of the time, even it goes up. Whenever there's panic, renting is pretty much either always the same or it tends to go up. Service like single-lets, HMOs, people, those one will still gain at the currently, because if those who are buying properties right now, they manage to get tenants to live there and rent it out, even though house markets crash, even though house prices go completely down, they will not lose, because at the end of the day, the good investors' aim is to buy the property, hold it for long, rent it out, get cash flow, because you get rich by cash flow. Some people do flipping, which is a bit different, but depending on obviously the economy and obviously the property market as well. If the house price is low, then you don't want to be flipping around that time. You always flip around when the property price is at its peak, and so you can get profit. So if people are thinking of selling their houses or anything, just rent it out, create cash flow, because at the end of the day, renting is not going down. Renting is still the same, regardless of whether there's panic, whether there's fear, renting price still remains the same. And yes, a lot of people will be asking me, Joe, why are you always focusing on properties? Why, is it safe? Is it secure? For me, I always believe properties is one of the safest and the securest investment out there. As you can see, if you're watching the news currently, what's happening in the stock market, a lot of people are selling their market and putting their money in what they consider as a safe investment. And obviously, one of the safest investment out there is property, and a lot of them, they're selling their stocks and putting their money in properties. This has been happening. If you guys are watching the news, you see a lot of that the stock markets keep going up because a lot of people are selling, a lot of people are panicking. But those are losers, because even when it comes to stock, you never sell when the stock is going low. Whenever market's crashing, never sell during that time. Always, always, always remember this is a formula. Never forget this formula. Buy low, sell high. So don't do, a lot of people do the opposite way. They buy high and they sell low. This is when it comes even to cryptocurrencies. I see a lot of people, when cryptocurrencies was booming, everybody was buying cryptocurrencies, everybody was being greedy. But as soon as the cryptocurrency market started crashing and started going down, you see people selling. And I'm thinking, what kind of formula people are using? They're buying high and selling low. Never, never, never do that. Don't forget, at the beginning, I mentioned Warren Buffett's quote. Whenever there's fear among the people, be greedy. And whenever you see people being greedy, buying, that's when you should be faithful. And then this is what I always observe, especially when it comes to the cryptocurrencies, stocks and bonds. I always see, at this time, a lot of people are selling. People are just getting rid of their stocks, getting rid of their cryptos, because they think, oh my gosh, I'm gonna lose my investment. It's crashing, this market is crashing. Let me quickly take my money out. Rich people don't do that. Rich people, that's the time where they get excited, because people who are panicking, they don't think, they act out of panic and fear. Whereas the rich people, those who are financially educated, or who are especially business minded and well educated, they will see that is for them. They call it that's their Black Friday. That's their biggest deal, because whenever the market crash, whenever there's recession, a lot of people panic, they sell, they're trying to get their money out, and then those who have money, they stop buying. They buy low, and when it gets high, people will go back again and start buying. That's when people will become greedy, and what the rich do, they sell it. Always buy low, sell high. So remember that easiest formula in everything you do. Buy low, sell high. Don't do the opposite. This is what 90% of the people does. They buy high, they sell low. I don't know where they get that formula from, but I understand it's out of panic. But today I'm here to reassure you guys, don't panic. Always follow what the leaders and those who are have made it when it comes to achieving financial freedom. Just follow that footstep and you won't go wrong. So properties, why properties? As I mentioned before, banks and everybody, they will always try to, what's the word I'm trying to look for? They will always try to discourage people to get into properties. You go right now, I'll give you guys a test to do. Go to the bank right now and ask them for a loan, and the bank, obviously, they will sit down with you, they will want to interview you, they'll ask you what you want to use the loan for. Tell them you will need money to invest into properties. The bank will tell you, nah, don't go into that. They won't give you the loan because property investing is risky, there's a chance you will lose your money. But go to a different bank on a different day, or to the same bank again, go and ask for the same amount of loan, and tell them that you want to get married, or you want to buy a car, or you want to buy something that's an asset. You want to buy I don't know, renovate your house, or buy a motorbike, a car, something luxury. The bank will be quick to give you the money, which I don't understand. The bank, they don't want to give you money to put into properties because they're telling you that it's risky, but yet they're telling you, they're encouraging you to give you money to get married, even though the divorce rate is the highest ever. But that's fine, they don't care. They say that's pretty secure. They're giving you money to buy a car, even though that's a liability, but it's okay, it's safe for them. You can have the money. But as soon as you ask them money to invest into property, in something that's going to create an asset for you, they say no. But what do banks do? When you go and you put your money in the bank, you start giving the bank, those who have saving accounts every month, you give money to the bank. What do you think the bank does with your money? They invest, guys. They invest with your money. They invest into properties. They buy all the properties. When you go for a mortgage, you're not getting the mortgage. It's the bank buying the mortgage. The bank is buying that property. So banks always invest in properties everywhere. They put in your money that you're giving them every month. They taking it and they're buying mortgages for people. They put in on mortgages, but yet they're telling you, don't buy a house, don't invest it in a house, it's risky. Think about it, guys. What is the mentality? Is Robert Kiyosaki mentions, the aim is to keep the poor poor. Don't let them get rich. Keep them poor. And how do you keep them poor? By giving them a poor mentality, a poor mind, a poor person's mentality. Take your money, buy a car, buy clothes, buy liabilities. Don't give them, don't buy assets, buy liabilities. What is a liability? A liability is anything that takes money out of your pocket. So even if you're buying a car, you're paying monthly, money's coming out monthly, you buy a clothes or whatever, anything that's taking money out of your pocket is a liability, it's not good for you. But anything that's bringing money into your pocket is an asset. So guys, whenever you're spending your money, always think, am I spending my money into a liability or an asset? And majority of us, we don't think about assets. The first thing when we get money is liabilities. Go to your, I always advise people, get your bank statements. Look at your bank statement. The money that's coming into your account. How many of your money or your salary is going into an asset? Do you have any money that's, probably going into an investment that's bringing you an asset? And how many money that's going out of your pocket into a liability that's not coming back in? Always think of assets and liabilities. When you get paid, for those who are working, when you get salaries, always think, where is my money going? Is all my money going out, or is some of my money coming in? So that's just a food for thought for you guys. I hope you enjoy this long episode, because I had a lot to discuss. I had a lot to take out of my chest. But I hope you guys enjoy it. Don't forget to click that notification bell, click that red subscribe button, like, comment if you guys have any other suggestions. If you guys think differently of me, I'm always good. It's always good to hear people's opinion, especially when it comes to HMOs. How safe, how best will their landlord manage their HMO, especially when there's coronavirus. If one of the tenants have been affected, how would they best sort of manage the situation? If you guys have any ideas or any clues, make sure you comment, and I'll be looking forward to hearing from you guys. Have a lovely day and stay safe.